Yo, what's up, guys? It's your boy Looney, and tomorrow before market open, SoFi is reporting Q3 earnings. I'm going to go over all the details and what I'm doing to prepare for this moment. But before we dive in, quick shout out to the Discord. It's free to join, and I also offer a premium membership. It's $8 a month, and it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So let's actually pull up SoFi. Let's actually take a look and go over what the expected earnings is. And on Robinhood, it is expecting a 0.08 earnings for Q3. You can see that it has been beating these past few earnings in Q3 of 2024, all the way up to the most recent one in Q2 2025. Now, the revenue estimate is approximately $890 million, which is about a 29% year over year growth. So that is quite a big achievement if they actually meet that. So the key drivers to watch during this earnings is to take a look at the member growth. Is SoFi still adding users at scale? Is the lending and deposit trends, whether the interest rate environment actually matters? Because we are going to see interest rates, and they're likely to come this week. At the end of this week, I think it's like Wednesday. We'll actually take a look. I think it's the 29th. So in a little bit, I'll pull that up. And then lastly is the guidance. You need to see what they actually signal for Q4 and beyond. Because earnings is just a headline. It's really the market cares about what's next. So we could see today that SoFi and honestly the rest of the market kind of went up and it gapped up. SoFi on the day is up 6%. So are these earnings kind of already factored in? That's possible. We could see a sell the news kind of event where they come out with good news, they're meeting earnings, or even they're beating expectations, and they still go down. But on the other hand, there is a lot of momentum to the upside in the market and SoFi, so we could actually see it benefiting. And that's why what I'm doing, what my thing is I'm not actually making any active trades. I'm simply just staying put, no new trades. I have a bunch of trades actually open. I have covered calls. I have a put or a call debit spread, another covered call at $44, another debit spread, and one long-term leap option. So I'm prepared to the downside with these covered calls, but also I'm able to catch the upside if SoFi does actually gap up with these debit spreads. And I guess my leap I'm not going to plan to close. It's a long-term play. But you can see I'm already invested at a size I'm comfortable with. I have 400 shares, takes around 21% of my portfolio, and I'm not making any kind of fresh entry. And another reason is earnings are volatile events. So the market is actually implying a potential around 10 or 12% swing for SoFi, either to the upside or the downside. So we can see that it's very volatile, and that's why I wouldn't do any kind of risky play. It's really just a gamble if you do that. So I'd rather just let the event actually play out rather than chase it. And my main focus isn't just the immediate spike, it's what comes after. And I did actually close a trade recently, or I closed it today, not really because of earnings, really just because I was already up pretty significant. You can see here, I had a put credit spread and I was up or over 70%. So I closed this one early and it had nothing really to do with earnings. It kind of did, but kind of didn't. I wanted to lock in those gains, and I kind of came to the conclusion that if SoFi gapped up a ton tomorrow, it's not like these options would go up too much. It'll only be going up a few dollars. So I closed it early, locked in those gains, and I still have a few options open. But this is what we're going to look at, or here is how we're going to react to things. Because once the numbers drop, and if they beat and raising guidance is very important, then we'll look for confirmation of momentum. And if narrative is strong, I'll probably hold and maybe do some scaling in, maybe do a debit spread, but most likely just going to hold. But if they miss or guide cautious, then I'll probably look at where support shows up, maybe in the 25 level, dollar price level, and maybe I'll sell a put credit spread. I don't really plan to sell any cash secured puts just because I don't want to own the shares at these prices, just because the market overall seems to be a little bit overvalued. So if the fundamentals remain intact, that's fine. That could just be a controlled entry zone. So my benchmark is, am I comfortable owning SoFi at these levels for the next 12 to 24 months? If yes, I'll stay or hold or even scale in a little bit. If not, then I'll reconsider, because this isn't about day trading. This is about positioning for the bigger story. So I was able to get SoFi early on. I have an $11 average cost, so I'm not really caring too much of where this goes. Whether it goes up or down, it's not like it's going to affect mine too much unless it goes down 70%. And if it does go down 70%, then I'll probably load up pretty heavy. But you can see I'm not too concerned of what the earnings are like. And if you did buy at these high levels, then you could do the more scaling in. If it misses and it drops a little bit, maybe wait for some support and then buy in a little bit more. But if it goes higher, maybe scale in less. It's really something that you shouldn't be going all in on, is the point I'm getting at with this, or what I would not go all in on a earnings play. It's just not a safe bet. So let's be real, because some investors will chase the hype. They'll buy calls ahead of the print and hope for big moves. But you could also run into the IV crush. So once earnings are released, a lot of the volatility does go away because everything is certain. They kind of know what the future looks like or what the current looks like. So the implied volatility kind of just shrinks. So buying options around earnings isn't always the best, because even if you're right, you could still lose out on the trade. So I don't do that. I focus on the process over predictions. Earnings days can flip fast. A beat might not move the stock if the guidance actually disappoints, whereas a miss might rally if the tone is confident. So that's why I'm comfortable saying I don't need to win tomorrow. I need to win over the 12 or more months. So whether SoFi pops, drops, or stays flat, I'm here for the long game. But like I said, other than that, we have a bunch of other earnings. I think Google and a lot of these big tech and the S&P 500 are dropping this week. Along with that, we do have the FOMC meeting, and I'm trying to find that right now. It should be in the prediction markets, and we'll see if that one pulls up. Let me see if I can find it. It should be economics. So yeah, on the 29th is when we will have that Fed decision. It's looking like at 25 basis points that they're going to cut it, which can be good for the market, but also it could be priced in and be another sell the news event. Either way, I'm not going all in. Even like something like crypto. Crypto should do well when interest rates are lower, but I'm still dollar cost averaging in. I'm not aiming for that home run to 100x my portfolio. I'll take those consistent small gains over a long period of time and reinvest and just letting it compound. So again, just to wrap up, SoFi earnings is tomorrow, and I'm not trading it. I'm just simply holding, but I will be watching closely and I'll adjust if neededly. But most importantly, I'll stay grounded, because sometimes the best move is actually just doing nothing. And having conviction in your position and waiting is the best move. Until next time, peace.